Hey, if you need to create financial projections for an insurance agency, then you've come to the right place. Whether you're starting up a brand new agency, acquiring an existing agency, or just growing your own currently operating agency, and you need financial projections, maybe for the bank or a potential investor, or just for internal planning, this template is going to be a perfect fit for you. And I have linked to this template in the description of this video below, so you can go grab that template and follow along. But first, my name is Adam Huxema, and I am the co-founder of Projection Hub. And Projection Hub helps entrepreneurs create financial projections for potential investors, lenders, and internal planning. And we've been doing this for the last decade. We got our start because I was the executive director at a small business administration, an SBA lender, for over a decade. And we often asked our clients that were starting new businesses to create financial projections for us. And our clients always struggled with this. And so I wanted to start a business that would help small businesses and startups create projections. And so what we've done is we've built a library of over 50 financial projection templates for all sorts of different industries, and made them very specific and customized, and then provided video walkthroughs like this to help you fill them out and really get what you need to your lender or to your potential investor. So with that in mind, I'm going to jump into this template and show you how it works. So we're going to start kind of with the end in mind here, and this is our at a glance tab. And so once you have done the work of filling out this template, this is what you're going to be able to get. You'll get a 5-year projection, and you'll get a lot of different profit and loss at a glance tables, some different graphs and charts, some startup use of funds, if it is a startup in fact, cash flow, break even, monthly sales forecast, and then some unique summary data for your insurance agency, customer acquisition costs, customer lifetime value, some key data points that you'll want to be keeping an eye on, and that your lenders and investors might want to know as well. You'll also get a 5-year projected income statement, a 5-year projected cash flow statement, 5-year projected balance sheet, and then you'll get an income statement, cash flow, and balance sheet for those 5 years, but broken down by month. So you get that monthly detail as well if you need that. So that's kind of what you're going to get at the end of this, but let's jump back to, there's a little bit of work that we need to do to fill this out in order to get you to that point. So if we come back to this input assumptions tab, you'll be able to fill out your own assumptions by changing the fields that are highlighted in blue. So any of these cells that are highlighted in blue are assumptions that you can change without breaking something in the model. And you'll want to put in your own information based on your own plan. So we're kind of assuming here a projection start month of January 2023, and we're just doing some internal planning. And let's say that what we're looking to do is kind of go out on our own, but maybe we have some existing clients already, but we're going to kind of try to bring those clients with us and kind of start this thing on our own. So you have maybe some current cash that you're bringing into the business. Maybe you're going to get $30,000 from an investor that's going to help you out and get started. And now we're saying, okay, we're going to have some real estate improvements. We're going to have an office. We're going to spend $100,000 building out this office. So you can enter that. Maybe you're going to spend $10,000 on computers, and you need some furniture and fixtures for the office, so $20,000 on that. And then let's say we're going to try to get a $100,000 business loan as well to help out. And so based on those numbers, you can come down here, and what you're going to see is that, okay, it'll say you needed cash for your fixed assets of $130,000, and we said we have $170,000 that we're going to be putting in. But this is what's cool about this table, is it tells you, based on these numbers that we're going to put in on these other tabs, how much working capital you're going to need until you break even. And so based on our calculations here, we think you're going to need $89,000 in additional working capital till you're cash flow positive in month 23 based on these numbers. So, after you complete your projections, you'll want to come back to this and just make sure, does it say right here that your starting cash is sufficient or not sufficient? And so since we are seeing that it's not sufficient, what we're going to need to do is we're going to need to ramp up this startup funding in some way. So maybe we need to raise some more investor money. Let's see. So now we're at 240,000, but we think the total cash need is 249. So we need another 10,000. Let's make that loan 110,000. All right, now we see starting cash. Oh, I'm still wrong. Sorry about that. Should be. Starting cash should be sufficient. There we go. Starting cash is sufficient. All right, so let me show you how we project our revenue. So let's say we've got current customers. We're going to bring 1,000 customers into this business. So maybe you're kind of already operating in a partnership or you're an agent already, and you think you're going to be able to bring over customers to kind of this new business. And so you're going to have 1,000 customers to start with. You're also going to have an advertising budget here. We have the ability to add an advertising budget. And then we assume a cost to acquire a new customer. And so we have $150 in here as a cost to acquire a new customer to start with. So if you spend $5,000 on ads and it costs $150 to acquire a new customer, that shows that you're going to generate 33 new customers from paid ads per month. Let's say we also have some organic sources of customers as well, word of mouth, and just other marketing. So between those new customers from paid ads and the organic, we can see we're going to have 63 new customers per month. We're going to add those new customers to the 1,000 customers you're starting out with. And another way to think about this could be you're acquiring a small agency that already has 1,000 customers. So that's another way to think about this as well. So you've got 1,063 customers, and you can see over time the number of active customers that you have. And those customers are going to purchase different types of insurance. And so we have the ability to add different categories of insurance that you're able to provide. And so we kind of broke this down, and you can change these categories based on your own agency's plan. Individual, commercial, health, and life is the 4 that we put in there to start with, and then you can break those specific types of policies listed here. So let's say we've got homeowners and car insurance. These are both individual types of individual insurance, and we think our average annual insurance premium for a customer is going to be $1,000 for homeowners and $750 for car insurance. And then you can put in what percentage commission you think you're going to receive from the insurance company. And so, this would be 10% of the annual premium. That's what this is assuming. Now, life insurance, my understanding is has high commissions, and so you get maybe a much higher percent commission of that average annual premium. And then what you'll notice here is that you can add the commission percentages over a 5-year period. And, typically you'll probably see a decrease. They kind of front load. You'll get a higher commission in year 1, and then those renewals that come in, you'll still get a commission on, but they'll be probably at a lower percentage rate. And finally, over here, what you're going to be able to do is you're going to say, okay, what percentage of these active customers, of these 1,063 customers, what percentage of them are buying homeowners insurance? What percentage are buying car insurance, life insurance, and each of these different insurance offerings that you have? So down here, you'll see like commercial liability insurance that we have. We're saying only 5% of our customer base is going to be buying one of these types of policies. So keep that in mind. Now, based on how you filled out this table and the number of customers you have, we're going to do all the work here to project your revenue. And they'll all be summarized into these 4 categories of revenue. Then jumping into our Input Other Expenses tab, you'll be able to add different types of expenses, and you can categorize them into different expense categories. You can also add additional expense categories in this table over here. And then once you add those or change those, you'll be able to see them in the drop-down box here and categorize your expenses. And then the other thing you're able to do is select whether an expense is a fixed dollar amount, so meaning it's the same dollar amount every month, or is it a percentage of revenue? So for example, if you have other agents, maybe you own the agency, but you also have other insurance agents working under you, and you're paying them a commission on what they're bringing in the door, they would probably receive some percent commission of their production, right? And so that is a good use case or an example of an expense that would be a percent of revenue. You can see down here I do have commissions for agents as a percentage of revenue, but I've kept it at 0 for right now. I'll show you why on the next tab. We're going to jump over to the input salaries and dividends. And so the reason I didn't put any commissions over here is there's a couple of different ways you could approach this. You could just say we're going to pick a flat percentage across the board that we're giving commissions to agents. Or you could do things in a little bit more of a detailed way, and you can add, let's say you want to add individual insurance agents, and you can set a base salary, and then you can give them a percentage of their production. So this would be a percentage of their sales. So this is basically saying, okay, agent 1 in years 1 and 2, they're bringing in, you've just got one agent, they're bringing in 100% of the business. They're going to get a 50% commission on the business that they bring in. That's what this is saying. So if it's, maybe it should only be 25%, you can change that that way. So the other thing that we should mention here is that you can pick what month the agent is going to start. So you'll see here I've got starting in month 1, ending in month 24, because what we're doing here is we kind of change the parameters. We're saying, okay, in month 25, we're adding a second agent. And now the split between the sales between those two agents is going to change. Instead of one agent bringing in 100% of the business, it's now split between these two agents, 50-50. And then each of them is going to get a commission on what they bring in. And then you're also able to add office staff. So you can add an office manager, maybe sales support staff. And you can, again, pick what month you think those positions are going to start. Maybe you're going to scale up over time. You may not need everybody all on day 1. And so once you've filled out all those assumptions, you're going to be able to see, oh man, we're making some major losses. So we're going to have to go back and see what did we screw up there? Great example. Okay, so this was accidentally changed to a percentage of revenue instead of fixed. So we were saying like 500% of revenue for accounting. So we jump back over here. Okay, that looks much better. Now we're profitable again. And so you can see what your projected sales would be and profitability, net income of $44,000 the first year based on the assumptions that we entered in here, ramping up to almost $1 million by the end of year 5, still maintaining a net income. And so you'll even see here in year 3, we actually have a small net loss. And that's because you're kind of investing in the business and you're hiring some more people in that 3rd year. And so because of that additional hiring, maybe you're break even for growth, but you're trying to ramp up to that $1 million in sales. So Just gives you some picture of how this could work, and you'll want to play around with the numbers and make it work for your specific plan. But if you have any questions about how to fill this out or need it filled out for you or customized for you, please don't hesitate to reach out. Leave us a comment in the comment section of the video below, or reach out to us at support@projectionhub.com, and we'd be happy to help. Thanks.